Here is your weekly rate update. Let's talk about last week and this week. So mortgage bonds rallied after China retaliated and they imposed 34% tariffs on U.S. goods. And while there are concerns over inflation with this ongoing trade war, oil prices have declined to under $62 a barrel, which is the lowest level since 2021. This is a key component of inflation, as most goods need oil to manufacture and ship them. There clearly are some recessionary fears out there right now. Fed futures are pricing in 5 25 bip rate cuts this year, which means they must be thinking there's a recession coming. There's a 40% chance of a 25 bip rate cut on May 7th and a 100% chance of a 25 bip rate cut on June 18th. The BLS jobs report also came out. It reflected there were 228,000 jobs created in March, which is much stronger than the estimates of 140. Average hourly earnings did rise by 0.3%, which was in line with the estimates. And then average hourly earnings were reported at 3.8% year over year, which was much lower than the previous reading at 4% and lower than the estimates of 3.9. There's clearly less wage pressured inflation going on. But also let's pay attention to the unemployment rate. So the U6 unemployment rate, which is a more indicative component of the real unemployment rate, declined from 8.8% to 7.9%. Remember the report last time I had mentioned it had actually increased, so it's gone down a little bit. News this week on Wednesday, we have mortgage apps and the 10-year auction and Fed minutes. Then on Thursday, we have initial jobless claims, the CPI, and the 30-year bond auction. And then Friday, we have the PPI. So a big week for rates. I will keep you posted. Until then, have a great week.